we find that a lot of people do not prepare well enough for the transition that they are going to make from India to the countries of their destination. What are the steps that you would be advised to take when you leave India?
Dear viewers, welcome to this episode of Expert Speaks. Every year, lakhs of people leave India to start their life journey as non resident Indians. They need to be attending to a lot of points before they move out of India. If they focus on things or on work on a checklist, then their life outside of India will be silky smooth. In this episode, I'm going to talk to the expert of the week, Mr. Gerard Culasso, on the checklist that you have to go through before you become an NRI. This is NRI Money Clinic for you, and I am Dr. Chandrakant, but your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
What are the points that you should focus on before you move out of India to become an NRI? Or if you have already become an NRI, to check through what are the things that you have missed. To talk about this and to talk about point by point on the checklist that you have to focus on, I have requested my good friend and a faculty member, Mr. Gerard Culasso. Mr. Gerard Culasso has 38 years of experience. He is partner at Culasso and Arana, a personal investment services firm located in Mangalore. Mr. Culasso commands an immense respect in the community of investors and his professional colleagues as well. It's over to you, Mr. Culasso. Please take us through that checklist which every aspiring NRIs must focus on. Over to you, Mr. Culasso.
Thank you very much, Mr. Butt. Happy to be back here again to deal with a topic that may appear relatively minor, but is a very major topic when we consider reducing stress. In the case of a lot of people, whether young or old, who are either leaving India or planning to leave India for indefinite periods. Now, when we look at Indian expatriates, they can be broadly divided into two categories. The first category consists of the vast numbers who have left India for employment in the various Gulf countries where there is no income tax. And the second category is people who have left India or are planning to leave India for various kinds of education or employment, or education and employment in the more advanced countries, including the Western countries, countries of Western Europe, Australia, New Zealand, Canada, US, and others. We find that a lot of people do not prepare well enough for the transition that they are going to make from India to the countries of their destination. So from just our experience and trying to learn from other people's experiences as well as mistakes, we have compiled a simple checklist of what are the common sense steps that any normal person can take in order to make their lives more effective and stress-free when they make this transition. This checklist is available in the form of a simple Word document, which I will, of course, share with Mr. Chandrakant Bhatt, and it can be distributed quite freely. And if any of the viewers have constructive suggestions, we will, of course, modify the checklist so that it can be of greater benefit to a larger number of people. So with this, let me straight away get into this checklist. What are the steps that you would be advised to take when you leave India? I have divided this checklist into two parts. One is steps to be taken before leaving India, and then steps to be taken after you have left India. So let me start with the steps to be taken before you leave India. The first step is examine and see what are the various bank accounts you have. I see that a large number of people, even young people, say aged in their late 20s or early 30s, very often have 6, 7, 8 savings accounts. 1 or 2 may have been opened by their parents ages ago. They have almost forgotten about them. Others may be because of their employment, the salary accounts, because by the time you have finished 6, 7, or 8 years in India of work, you might have changed to 2 or 3 jobs. And the salary accounts may be in different banks. So these accounts are opened, but they are never closed. They are just kept open with some very small balances. Do not do this. When you do not require a bank account, kindly close it. Because once you go abroad, especially to countries where there is income tax, you have reporting obligations. Even the meager interest you may get on your savings accounts have to be reported. If it is not reported, you can unwittingly get into unnecessary trouble. Therefore, review your accounts and zero them down to one account, or if there is a good reason for it, 2 accounts at the most. Next, ensure that these accounts are active and KYC compliant. That is very good, very important. After you have acquired the NRI status, change your existing bank account or accounts to what is called the NRO, non-resident ordinary savings account. If you do not do this and keep your resident SB account open for an indefinite period, you are violating a law called the Foreign Exchange Management Act of FEMA. It never pays to violate the law. Just because a large number of people are doing it and those people have not received any kind of notice or any action taken against them does not mean you must do it. It always pays to obey the law. So close unnecessary accounts. The 1 or 2 accounts that you retain, ensure that they are active and KYC compliant. And once you become an NRI, please change it to the NRO SB account status. The next step, when you have got the NRI status, consider whether you are going to make investments in India on a repatriable basis. If so, please open an NRE savings account. Even to this day, I see a large number of people in pretty good and steady jobs abroad investing in India on a non-repatriable basis. Do not do this. Your money is coming from abroad. Always keep it easily repatriable. You should easily be able to take it outside India in case you need to do so. And this is especially true for the NRIs in Gulf countries. In Gulf countries, it's always better when you're investing from there to have all your investments under the repatriable basis, for which you will require an NRE savings account. One important tip I can give you here is ensure that your main NRE SB account and your main NRO SB account are in the same branch of the same bank. Because tomorrow, if you want to transfer money from the NRO account to the NRE account, after completing the relevant formalities, then it is much easier to do it when both these accounts are in the same branch of the same bank. The next point that I want to deal with is, once again on the bank accounts, before you leave India, ensure that you have online access to all bank accounts that you are keeping open in India. Not only should you have online banking facilities and internet banking facilities, you must also ensure that you have at least one debit card that is active. And the debit cards issued in India are mostly international debit cards. In an emergency, you can use these cards abroad to withdraw money from your bank account in India. So at least one international debit card linked to your NRO account should be kept active. One more area where I find many people lacking is, when people leave India, their NRO and NRE accounts, or even their resident SB accounts, are generally active. They have internet banking access in many cases. But the problem arises when they try to log in from abroad. Today, because of a lot of security structures, the security software of the bank detects that this login is not from India, that this login is from a place from which the normal logins are not taking place. And therefore, you are unable to access your account. What must you do? Before you leave India, please visit your bank. Tell the bank that you are now on the verge of leaving India for a long time. If you can produce documentation like your education visa or your work visa or a residence permit that you have received in advance, many banks agree to change the SBI account to the NRO SBI account even before you leave India. But the important thing that you must do is tell the bank that when you are abroad, you want unfettered access to your account. You want to access your account, you want to transact. You may have payments that you want to make in India. You may have bills to be paid in India. You may have certain family members that you want to support by making online transfers of funds. So ask them what you should do. Should you give a letter saying that you're going abroad? Is there some facility or menu item in the online banking process which you must activate so that you can be sure that you can access your account from abroad? And if you run into trouble in operating your bank account when you're not in India, then you should ask your bank whom you have to contact. What are the exact helpline processes that you will have to fall back upon to ensure that your account is active? We move into another area now. If you are moving abroad on work and you have certain amount of assets and or income in India, and when you're abroad, you will also be earning money and making investments, you need to have a client relationship with a good chartered accountant in India. Most chartered accountants are very tech savvy. They have all kinds of online facilities. They answer emails. You can do all your transactions even online. But ensure that you have a relationship with a chartered accountant in India, especially if you already have some assets and income in India and you are intending to continue your investments in India with money that you have earned abroad. Moving to another area, record keeping. All your Indian proofs of identity and address, let it be income tax PAN card, passport, Aadhaar card, election identity card, driving license, visa, residence permit, whatever it is, each and every proof of identity and address, however unimportant it may appear to be, must be scanned by a high quality scanner and uploaded to some internet facility where they can be accessed and downloaded at any time. You can open a cloud account. You can email it to yourself and save it in a special folder. But you should be able to retrieve this information or these scanned images at the press of a button from anywhere in the world. Similarly, if you own real estate properties in India, all documents pertaining to the real estate properties, whether they are historical documents or sale deeds or RTCs or khatas or property cards, whatever it is, you have to save them, scan them once again with high quality scanning facilities, upload them once and be able to retrieve them at a moment's notice. These are very important, especially when questions are asked by foreign tax authorities or foreign tax consultants. You should then not go searching for these proofs. Also, if you have any investments in India, it can be a simple thing like the public provident fund account or some government bonds or capital gains exemption bonds or bank fixed deposits, whatever. If you have any of these kind of investments which are not available in the electronic form, then you must also scan images of these investments and save them. If you have, on the other hand, everything in a demat account, then of course the demat statement will give you a lot of information. But once again, you must have online access to your demat account. Now, some countries, notably Canada, have what they call a date of landing. That date is very important because all assets that you have, whether financial assets or physical assets, must be valued as on the date of landing. The significance of the date of landing is later in Canada. When you are in Canada, when you are either a national of Canada or a resident of Canada, if you sell any property in India for the purpose of calculation of capital gains in Canada, not in India, in Canada, the capital gains will be your sale proceeds minus the value of the asset as on the date of landing. It is totally different from the way we calculate it in India. That is the sale price minus the cost of acquisition or the deemed cost of acquisition, plus, of course, any cost of improvement. So the date of landing is important for some countries, and you must find out whether there is any such implication for you when you are moving to your country. For the purpose of valuing real estate assets, there are any number of registered valuers who will not only do it, but give you a good report of 2 or 3 pages on exactly what the property is, what their opinion of the value is, and their reasoning behind the value that they have given you. Next point. It is very important to have one valid and continuing cell phone connection. That is of India. You must carry this with you abroad, and you must also purchase what are called SMS packs. A lot of transactions today take place online, and they take place based on one-time passwords or reference numbers sent to you by SMS. Almost all leading Indian telecom companies today offer SMS packs, which are quite economical and which will enable you to receive SMSs even when you are outside India. Even for other reasons, it is good to have one valid and continuing Indian cell phone connection. Anytime you travel back to India, all you have to do is shortly after your plane lands, you just have to switch on your Indian mobile and suddenly you are connected. The postpaid option may be better here because that's easier to manage. A lot of people who have prepaid connections, they fail to keep the prepaid connection active, as a result of which they lose that connection. It is vitally important to have 1, a cell phone connection, and 2, an SMS pack when you leave India. Finally, in the points that I'm dealing with pertaining to the steps that you have to take before you leave India, consider carefully whether you have enough assets and income in India, or you have other responsibilities in India which require you to execute a general or specific power of attorney in favor of some trusted person to handle your work in India. But be very careful, because we have a long record of general powers of attorney or powers of attorney in general being misused. So the person should be absolutely trustworthy, and also see, before you even think of choosing an attorney, however carefully, also see whether once you are there, you can also do almost all your transactions electronically or by email, or even if necessary by sending signed documents by courier. If you can avoid the power of attorney, well and good. If you can't, choose your attorney carefully. I now come to the second section of this talk. What do you do after leaving India? Once you leave India, especially in countries where there is income tax, the income tax laws there are enforced very strictly. Therefore, it may be advisable for you to have a good tax consultant or the Indian version of a chartered accountant in your country of tax residence. A lot of people tell me that they employ the do-it-yourself mechanism for their tax returns abroad. If you can do this, excellent. Please go ahead and file taxes and avoid the fees that you would pay to a tax consultant or a chartered accountant. But even then, remember that tax consultants and chartered accountants are experts. Therefore, even if you're going to do it yourself later, in the initial stages, in the first few months, 1 or 2 appointments with a tax consultant or a tax professional would be very important, because you can pay only for that appointment, and you can go with a notebook and note down exactly what are the things you must be concerned about and careful about when you start your work life in the advanced countries where there's an income tax regime. Whether to actually have your own tax consultant or chartered accountant or tax filer would depend upon how much you are earning, what are the kind of assets you eventually build on. Maybe in the initial stages, you can do it yourself. Later on, you may need the services of a tax consultant. But give this matter careful and considerate thought, because it is not good to fall foul of the tax authorities, whether in India or abroad. The next point, if you had an employees' provident fund account in India, this must be closed within an outer limit of 3 years of your ceasing to make contributions thereto, if you are unlikely to return to India. If you're just going on short-term assignments, 1 year or 2 years, then you're coming back and you're probably going to resume work in India, it is fine. You can maintain the same EPF account. You can transfer it from one employer to another. But if you're leaving India more or less permanently or for the very long term, do not keep your EPF account open. You can close it on your first visit back to India. The next point that I would like to deal with is come to a reasoned conclusion about whether it is still worth continuing to invest in India from India. Let me clarify this because a lot of people misunderstand this. I'm not saying you should consider whether to invest in India or not. That is a simple question to answer. India is one of the most attractive destinations for investment. A large, diverse, and vibrant country with the kind of economy that India has and the kind of growing middle class market that we have will always be an attractive center to invest in. But when you leave India, especially for the advanced countries, remember that you have two very important obligations. First is to report all your assets and accounts in India under either a US law called the FATCA or the other called the CRS, the Common Reporting Standards. The first thing is you have to report your assets. Second, you have to include your Indian income, if any, in your tax returns there. And if any tax has been deducted against you or you have paid any tax in India, that tax that you have paid in India is available as a set-off against the tax that you have to pay abroad under the double taxation avoidance agreements signed between India and most of the advanced countries of the world. But please remember that this reporting of assets as well as inclusion of income, Indian income, in your foreign tax returns can be quite a cumbersome experience depending upon how large your investments and other things are in India. Also remember that this is not a one-time exercise. This has to be done every year. A lot of countries' financial years differ from the Indian financial year. For example, in the United States, the financial year is the calendar year. In India, it is April to March. In Australia, it is July to June. So there can be some overlap, there can be some confusion, and this can lead to mistakes for the normal individual. If you think that sending money to India to your NRI account and then investing in the Indian stock market or through mutual funds and then reporting income as well as assets back to the tax authorities in your country of residence, if you think that this is very cumbersome, then I would definitely advise you to make investments in India either through India-centric mutual funds that are available to you back in that country, or through ETFs, or through any other investment options that are available to you from your country of residence itself. And in the years ahead, you will also be able to invest in India through mutual funds operating in what we call the International Financial Services Centers, or IFSCs, that have now been established in India. So far, of course, to the best of my knowledge, there is only one such center called the Gujarat International Financial Tech City, or GIFT City in Gujarat. That's the first IFSC. But more will definitely be established. And in these, both insurance companies as well as investment companies will start to operate. And once you get simple products like index funds or very well diversified equity funds or good balanced funds in through these centers, then you can be abroad, invest in foreign currency itself, and you can control the whole operation from the country in which you are resident, which makes it very easy for you to report and offer your investments for both for reporting, for disclosure, as well as for tax purposes. What is my final advice? My final advice is, if you are leaving India with the intention not to return, to take up permanent residency in some other country, and eventually to obtain nationality of that country, citizenship of that country. And if you're going to work in that country and live most of your life in that country becomes what we call the center of your economic interests. What is my advice in such cases? Most investment experts will tell you that the country which is the center of your economic interests is the country where you should have your primary investments. Why? Because that country will also offer you not just investment opportunities, but also a lot of tax saving and retirement oriented investment opportunities. So that helps you build up good investments in that country for your future and especially for the 2 or 3 decades that you can spend in retirement. Having said that, being a person of Indian origin, if you want to also have investments in India, please do so, but bear in mind the kind of points that I have raised before this. I now come to my last point. And the last point is, consider concurrent wills. What are concurrent wills? If you are, for example, residing in Canada, you have built up assets in Canada, please make a will in respect of your assets in Canada. But do not include your assets in India in that will. In respect of your assets in India, please make a separate will. In your Canadian will, you will mention a paragraph or two that goes something like this. I am a person of Indian origin. I moved to Canada in such and such a year. I took up employment here, got my permanent residency, and eventually became a citizen of Canada in such and such a year. However, being a person of Indian origin, I have certain assets and investments back in India. For those investments that are back in India, I have made a separate will. This will that I'm making in Canada pertains only to my investments in Canada. Similar paragraphs with due changes will also appear in your Indian will, where you will state that you are a citizen of Canada, but you have certain assets and investments in India. So the will that you're making in India applies only to your assets in India. Why do you do this? After your lifetime, can you imagine the difficulty the executor of your will is going to have, the executor of your Indian will is going to have to execute your assets in Canada? Is that person going to travel to Canada not knowing anything about the environment there to try to settle your matters there? Ditto for your executor in Canada. Is that person going to come to India, have the experience of dealing with Indian government offices, especially in matters like real estate? So when you think of these things, concurrent wills are a very good area to be in. And concurrent wills are something that you should give priority sooner than later. So with this, I hope I've given you some ideas about the kind of steps you take when you decide to leave India for an indefinite period. Thank you.
Mr. Colasso, thank you very much for your kindness to prepare this list, which will make life so much easier for all the aspirants who want to become an NRI. It's just not for the future NRIs, even for those NRIs who have already become NRIs. You have not looked into this checklist. It's time you go through this entire list once. And if you have missed something, probably you take some extra days of leave during your next visit to India, attend to all these things, and make your life simple and easy to deal with the authorities on any of the issues that require attention on. Thank you very much for your kindness, Mr. Colasso. Always it's a pleasure talking to you.
Thank you. Thank you.
Dear viewers, hope the checklist prepared by Mr. Gerard Colasso is of immense help to you in case if you have an intention to become an NRI in future. For those of you who have already become NRIs, please go through this, and if you have missed on something, do make it a point to attend to it during your next visit to India. If it did help you with all the knowledge that is required in this, don't forget to give a thumbs up to this video. If you are a person who is watching this channel for the first time, or if you are yet to subscribe for the channel, please hit the subscribe button and press the bell icon. Do not forget to share these videos with all the friends and relatives and all the WhatsApp groups on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you next Tuesday with yet another expert, with yet another useful topic. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.